And just taking a look back at 2010, did things pan out economically as you would have expected them to? Did the economy perform as well as you might have expected it to last year?
Maybe not exactly as well. You know, back in the beginning of 2010, a year ago, we were starting to see some better economic data. We were clearly getting out of the recession. And remember, fourth quarter, first quarter, in particular in South Africa, were fairly good quarters. And then around the middle of the year, just when we thought we were going to have a kick, a boost from the World Cup, the economy started losing some momentum again. So at the end of the day, we ended up with a growth performance that was okay, but probably we had 2.7, 2.8% growth in 2010. We could have hoped for perhaps for a bit more at the beginning of the year.
Just going into 2011, do you think we're going to see that growth momentum starting to accelerate again, that growth that started dipping in the third quarter of last year? Do you think we'll have a better performance in 2011?
I think we'll have a bit of an acceleration, yes, because the global situation, we see it as stabilizing and improving a little bit in the US in particular. So the downside risks, the so-called fat tail distributions, is going to be reduced a little bit. So that would create a situation where business confidence can regain a little bit of momentum. And locally, we know that consumer spending is growing at quite a decent pace, and businesses are quite cash rich, so they are in a position to invest if they want to invest. Problems are still, in the case of South Africa, the strength of the rand, the fairly high level of household indebtedness, and fiscal policy, which is much less supportive than a few years ago. Not to mention, of course, the structural problems, which we know and we've discussed many times in the past, doing with labour performance in particular.
Well, we had money supply and credit extension data out on Friday. Of course, it was New Year's Eve, so I'm sure nobody paid too much attention to it. And it looks a bit mixed. So you're talking about consumer spending picking up, but credit growth slowed slightly. So there still isn't that much demand for credit in this economy, is there?
Credit growth slowed slightly, although when you look at the split of the data, it's one volatile component, so-called investments, which accounted for the slowdown, and that is basically banks buying securities issued by the corporate sector or derivative products issued by the corporate sector. If you look at the lending to households or even lending to corporations, which is mainly included in the loans and other loans and advances, it accelerated a little bit. So you have seen some pickup in credit, in particular for vehicle loan purposes, vehicle purchases, and basically, you do see some indications that the monetary policy easing that we've had over the past 2 years is working its way through to the system. Households are more willing to borrow, and we've seen it also in the quarterly reports of the National Credit Regulator. The number of new loans granted, whether it is vehicle loans, mortgages, or unsecured consumer loans, is definitely up quite significantly on the number that we had a year before.
Do you think we could see more monetary easing as we head into 2011? We have a meeting in about 3 weeks' time with the MPC. Got the rand trading around that 660 mark, and this is something that does worry the Reserve Bank and the Treasury. Do you think that could be the catalyst for another interest rate cut?
I think it will largely depend on the rand and what the rand does between now and the next MPC meeting. Because if you thought of what the Reserve Bank told us after the last meeting, they hinted that unless things change with the inflation projections, they would not cut again. Now, inflation has gone up a little bit over the past 2 months. It stopped surprising on the downside. The economy is not particularly strong, but at least showing some signs of improvement. So had it not been for the rand, I would have said definitely no further rate cut at the January meeting or any of the future meetings. That said, since the last MPC meeting, in trade-weighted terms, the rand has appreciated by more than 5%. If the Reserve Bank has reasons to think that this might be permanent and that this might lower the inflation projections going ahead, then there might be a case for a rate cut. I mean, it's still very open at present, of course. There's still some data likely to come through, but I do think the rand will be an important part of the debate when the MPC meets.
Are you comfortable that inflation is going to stay within targets as the Reserve Bank expects it to for this year and next year?
I think it stays within target, but Whereas for the current year, I'm very much in line with what the Reserve Bank expects for inflation to be in the low 4.5% on average. I think in 2012, we might see by then some downside correction in the round that might push inflation somewhat higher than what the Reserve Bank is expecting. So I think when it comes to 2012, their inflation forecast is probably a bit too much on the low side, and eventually they will have to revise it up, which is probably what eventually will prompt some normalization of monetary policy on the way up. Because let's face it, even if interest rates do not cut further at 5.5%, this is not the long-term equilibrium for the South African economy. If growth does normalize and inflation no longer surprises on the downside, eventually they have to raise rates.
The strong rand has been shielding us from stronger inflation because the petrol price going up by 29 cents on Wednesday, that oil price sitting at $95 a barrel at the moment. But it's only the strength of the rand that saved us from an even bigger hike, isn't it?
It would have been bigger, yes, absolutely. Absolutely. But the advantage of South Africa is that generally when oil prices go up, prices of other commodities, including commodities that we export, go up as well. And that means the rand generally is quite strong, and that mitigates the impact of the higher oil price. But as you were saying, even with the strengthening of the rand over the past 6 or 7 weeks, we are seeing a non-negligible increase in the petrol price, and that is something that will raise inflation, at least in the short term. It is also something that the Reserve Bank will take into account. Despite
the rand's strength, we saw a bigger than expected trade surplus for November, coming in at 8.4 billion rand, and that followed a surprisingly big deficit the month before of 3.2 billion rand. What do you think has been pushing that? I know there were some one-off factors, such as those iron ore exports.
Yes, I mean, some iron ore exports were counted in November, where actually the exports took place in October. But if you look at an average over the last 3 to 6 months of minerals exports, and that includes iron ore, coal, steel, I mean, that has been doing very well, especially iron ore and coal. So obviously the fact that we are seeing commodity price increases, we are seeing a positive terms of trade effect, export prices rise faster than import prices, means that we have some trade surpluses, we have low current account deficits, even though in real terms, in volume terms, our exports do not perform very well. So right now we have a situation which is all right for the rand, because we have a relatively low current account deficit, so relatively low financing need, and money flows into South Africa from the rest of the world. Obviously, if the situation with commodity prices were to change at some point, our terms of trade effect would become less favorable, our current account deficit would widen, and the attractiveness of South African financial assets would probably recede as well. And then you could have a correction in the rand. So the rand is very much a commodity story at present.
How do you think that strong rand is going to translate into our manufacturing sector? We are getting manufacturing numbers out in 2 weeks' time. I think most of the other PMIs are coming out today globally. Ours comes out on the 17th. Do you think we're going to see it reflected in that PMI number, that it could come under pressure again?
It could potentially. It could potentially, because clearly manufacturers, especially those who are exporting or competing with importers, will feel a squeeze from a 5% appreciation of the rand. Now, of course, there are always some lags. You know, it doesn't necessarily happen in the first month, although with confidence indicators, the impact can be relatively quick. At the end of the day, we have seen a little bit of improvement in the manufacturing indicators in the past few months, after, in particular, the third quarter, which was affected by a lot of strikes. But we are not recovering as fast as we should. We are not doing as well as other countries, in part because of the strength of the rand. So clearly our manufacturing sector is still under pressure.